Alright guys, so in this video I'm going to introduce to you a new strategy which you can use in your currency trading. Is called the FX Momentum Breakout. And this can be traded on the M15 time frame or the H1 time frame or even higher time frames. Personally, I love to trade it on the H1 time frame, but at times I can also trade it on the 50-minute time frame. So first, a quick introduction. This momentum breakout, or we just call it MB strategy, we seek to go long on the strongest forex pairs as it breaks out from resistance levels, and shorting the weakest FX pairs as it breaks down from support level. So again, like I said, you can trade it on M15 or H1 or even higher time frames. You could get anything from 10 to 15 trades a month. Average win rate, like most strategies, would be 50 to 60%. Risk to return ratio is not fixed for this strategy. Sometimes you could be risking 1 to make 1.5, sometimes 1 to 2, sometimes even 1 to 1.4, depending on the situation. All right, so you can trade this on all FX pairs. So with that, let's get down to the strategy. All right, so before we go into the mechanics of the strategy, let's revise some of the important indicators that you need to use for this strategy. Now, like all my other strategies, the moving averages that we're going to use are pretty much the same moving averages, right? So you've got your 6 EMA, your 18 EMA, your 50 EMA, and your 200 SMA. So nothing different about that. One of the things that we need to use would be the ATR indicator, which is the average true range. Okay, so to get the ATR, simply go to Insert, Indicators, and go to ATR. So once you click on that, you would have the ATR indicator that pops up. Okay, so the ATR measures what's the average range of the candles in the last, in this case, 14 periods. So why is this important? Because at times of high volatility, when the currency pairs are moving a lot, the average range of the candles are bigger. Okay, when low volatility, it is smaller, and this will help us to determine where to place our stop loss. Okay, so you want to place your stop loss ideally at least 2 ATR away from your entry price. In fact, you can also apply this rule to the other strategies that you have learned as well. 1.5 to 2 ATR away, more conservative, 2 ATR, which means that your stop loss is 2 times the average range of the day. So it's unlikely to get hit by the normal volatility of the currency pair. Okay, so bear in mind, we'll be using ATR quite a bit. The other thing that we will be using a lot is the currency strength meter, the CSM meter, which I've just introduced. So remember that whether you're in level 1 or level 2 videos, do watch the special lesson on how to use the currency strength meter, and ensure that you have downloaded and inserted the meter into your platform. When the markets open, you'll be seeing that these currency pairs in the meter will be running really fast. So right now, as I'm teaching this course, the market's closed, so you can see that it's static, but you should see it running. The other thing is, if you're new to using this meter, bear in mind that when you first install it, you have to ensure that you open all the 28 currency pairs in your MT4 platform, so it can pull and download the data from your broker in order to run this meter. Sometimes if you do not open all the currency pairs, the meter may not run effectively because it can't draw the data from your MT4 platform. It will also take about sometimes up to 5 to 6 hours for it to fully load the data and start running effectively. The meter also uses a significant amount of memory. So you find when you run the meter, sometimes your charts could be a bit slow. So because of that, I suggest that you only open the meter on one particular chart. So for example, if you're looking at many charts, Euro USD, dollar yen, dollar franc, don't open the meter on every single chart, or it's going to be really slow. Just open it on one chart where you can watch the meter, and for the other charts, just look at the charts without the meter. All right, so with that, let's jump into the strategy, shall we? So the first thing to do every day is to identify the potential pairs to trade using this strategy. And we always start by looking at the currency meter. So what we do is, when we look at the currency meter, we are always identifying the strongest currencies and the weakest currencies over the higher time frame. So in other words, if we are looking to trade on the H1 time frame, then we look at the higher time frame, which is H4, to look for currencies to trade based on the strength meter. If we are looking to trade on the M15 time frame, we look at the H1 time frame on the currency meter. So for the purpose of this example, I'm going to focus on trading on the H1 time frame. So what do I look at? That's right, I look at the H4 time frame. So over here you can see the H4 time frame, and I'm looking at the strongest currencies. So the strongest currencies are those that have a number of 60 and above coded in green. So in this case, on this particular day, the strongest currencies would be USD, right? Dollar and yen. These are the two strong currencies of the day. And which are the weak currencies? These are the ones that have the number which is below 40 and coded in red. So the weak currencies today would be Euro, Pound, and Aussie. So based on this, what are the pairs that we're going to focus on? We're going to open the charts on MT4 and we're going to look at those charts during the day to look for the setup. So let's look at all the possible combinations. So the first combinations would be, again, buying the strongest and selling the weakest at the same time, right? So we're looking at euro dollar, right? So let's look at let's first write down the pairs. So we've got euro USD, we have got pound and dollar, so pound dollar. We have got Aussie dollar. All right, so these are the possible pairs. Now, then we look at yen, right? So we can then combine yen with euro, pound, and Aussie. So you've got your euro yen, and similarly your pound yen, and finally your Aussie yen. So this tells me that on this particular day, at least for now, I'm going to only focus on these 6 pairs to look for the setup for a momentum breakout. And again, I'm going to look at these pairs on the lower time frame, which is the H1 time frame. Remember, we use the higher time frame, in this case H4, to look at the pairs to focus on, and we drill down to the lower time frame H1 to look for the setup. So if you look at all these pairs potentially, what am I looking for? Okay, so for Euro USD, Pound dollar, and Aussie dollar, I'm looking to sell the dollar. Sorry, the dollar is strong. I'm looking to buy the dollar and to sell the Euro, Pound, and Aussie, which means I want to look at going short the Euro USD, short the Pound dollar, and short the Aussie dollar. Okay. At the same time, yen is strong, so I want to be buying the yen and selling the Euro, Pound, and Aussie. So in other words, if I want to buy the yen, which means I want the yen to go up, I want the euro to go down, so I'm shorting the euro yen, I'm shorting the pound yen, I'm shorting the Aussie yen. All right, so on a particular day, let's say you look at a currency meter on H4 and you identify that the dollar is the strongest currency in green, and the yen happens to be the weakest currency in red on a particular day, right? So that tells you that I'm looking to buy dollar and sell yen, which means I'm looking to go long on the US yen or go long on the dollar yen. So what I'll then do is I will look at both the time frames, which is the higher time frame, in this case H4, and I'll also be looking at the lower time frame H1. Now, what do I want to be looking at on the charts? Now, I can tell you that if dollar is a strong currency, which is again 60 and above, and yen is a weak currency, which is 40 and below, or below 40, when you look at the higher time frame of the currency meter, which we're looking at, you will notice that the candles would be on a very, very clear uptrend. So what you want to see is you want to see the 6 EMA, which is this red line, above the 18 EMA, which is the blue line, which is above the 50 EMA, right? So red line above blue line, above blue thicker line. And you want to see the price clearly above the 18 EMA, okay? So when you look at the higher time frame chart, you would definitely see that, because again, you're buying the strongest, selling the weakest, and you will see it on a chart that is going up very strongly. Now, if you look at the lower time frame is the one where we're looking for the exact setup, okay? And the word of this strategy is called momentum breakout. So you can guess that this strategy is based on breaking out of a level of resistance, okay? So you can see that on this H1 time frame, we have got a level of resistance over here. So later you learn the exact strategy setup where you want to see the price breaking out of some kind of a resistance, right? So you can see that this was the breakout, right? So the moment it breaks out, you want to see again the same sequence, that the 6 EMA red line is above the 18 EMA blue line, above the 50 EMA thicker blue line. And the price must be above, again, the 18 EMA. Okay, so that's what you want to see on both charts. So let me just reiterate that again. When you first look at the charts, the H4 has to already be aligned. Okay, which means the 6 above 18, 18 above 50, price above 18. It already has to be aligned. But on the lower time frame, it may not be aligned yet because you're waiting for the setup, which may not have occurred yet. Okay, so you're waiting for that breakout. So you could be waiting for an hour, 2 hours, and the moment it breaks out, then you would see that sequence of 6 above 18, 18 above 50, and price above 18. Right, got that? All right, so once we have drawn our resistance level and we have seen that breakout on the lower time frame, you know, where do we place our buy order? Where do we place our stop loss? Where do we place our profit target? So let me use this graphic to explain to you how we set it up, okay? So once again, this is our level of resistance, and we see a break of that level. So what we're going to see is the price has been going sideways and it moves up strongly, right? So it moves up like that. Now, A is the level of resistance, or we can also say A is where the price started moving up, okay? So we call that A. Now, as the price moves up, we are waiting for it to hit a high and then start coming back down. We are waiting for it to retrace, to enter on the retracement. Now, how much retracement do we wait for before we buy? Well, first of all, we identify the top of this move as B. So B is our swing high, okay? Now, we are waiting for a 50% retracement. So we want to wait for at least a 50% retracement before buying into this currency, so that we can catch it as it continues the breakout. So how do we find this 50% retracement? We use the Fibonacci tool. Now, normally when we use Fibonacci, we click on A and we drag it to B, right, to find the retracement level. For this strategy, it is the opposite. We're going to click on B first and drag it to A. And when you do that, two levels will appear. First, you will see the 50% retracement level, and you will see the Fibonacci 161.8 level. This is where we'll be placing our take profit, our profit target. and the 50% is where we'll be placing our buy limit, our entry. Now, if you're not sure about how to use the Fibonacci tool to do this, I'll show it to you in the MT4 example in a short while. Just for now, do your best to understand this setup, okay? The other thing to always ensure is that this retracement, this 50% retracement, should always be at least 1 ATR to 2 ATR. Okay, later I'll explain more that if it retraces to another level of support here, then a 1 ATR retracement is sufficient. But if it retraces and there's no support over here, then we like to see at least a 2 ATR retracement. Okay, so what we do is we will place our buy limit order. Bear in mind, it's a buy limit order, which means we will buy if the price reaches the 50% level or lower. Then our order will get filled, we're in the trade. Okay, now next, where do we put our stop loss? Our stop loss will always be placed 5 to 10 pips below the level of resistance. So remember, this resistance, when it breaks the resistance, that resistance becomes support. So we always want to place our stop loss below that level of support so it is protected. It is not likely to be hit as easily. Okay, and we can place our stop loss about 5 to maximum 10 pips below that level of resistance. Now, some of you may be asking, right, so do I use 5 pips or do I use 10 pips? When do I use which one? It depends, okay? We always want to make sure that between your entry price and your stop loss price, we call that the 1R. Recall that? 1R? Okay. Now, always ensure that your 1R, your stop loss distance, is at least 2 ATR. So if you place the stop loss 5 pips below the resistance level and you can get a 2 ATR stop loss distance, that's good enough. Then just leave it as that, right? But if you can't even get a 2 ATR stop loss distance, then move your stop loss even lower to about 10 pips until you can get at least a 2 ATR distance on your 1R distance over here. Now, where do you place your profit target? Again, your profit target is determined by the Fibonacci 161.8 level. We call that the Fibonacci projection level. And again, I'll show it to you in the MT4 charts in a while, so hang on, okay? And you want to also ensure that from your entry point to your target profit, you are making more pips than you are risking, right? So ideally, you want to achieve at least 1.3R or more. Sometimes you could be risking 1R to make 2R, sometimes 1R to make 1.5R, 1R to make 1.3R. So it's different for every trade because your profit target in this strategy is not fixed. It's determined by the Fibonacci extension level. But as long as your profit is more than your risk, it's a worthwhile trade to take. Okay, so let's summarize everything we've talked about so far. And again, this is for the long setup. So what's the first thing you do again? You find which currency pairs to focus on for the day. So to do that, once again, check the currency strength meter on the higher time frame. So again, if you're trading on H1, we're looking at the H4 time frame. And on H4 time frame, we're looking at the strongest currencies, 60 and above in green, and the weakest currencies, 40 below in red. So we always want to be buying the strong currencies and selling the weak currencies. So for example, you may notice that, hey, dollar is strong, yen is weak on that day. So we want to be going long the dollar yen. So what we do, we will look at, first of all, the higher time frame chart. And when you look at the higher time frame chart, which is H4 in this case, you will see that it's on a very, very clear uptrend. The 6 EMA above the 18 EMA, 18 above 50, and the price clearly above the 18 EMA. You will definitely see that. And then you drill down one time frame lower, which in this case will be H1. So on a H1 time frame, you are looking at the price, and you're looking at you want to see the price in a way going sideways, right? Consolidating, and you draw a level of resistance, and you're waiting for a point when the price starts moving up strongly. We call that a breakout. So you're waiting for a breakout. Now, at the point of it breaking out, you want to see again that clear uptrend sequence where the 6 EMA is above the 18, 18 above the 50, and the price above the 18 EMA. So this must happen on both time frames. Once you see that breakout, as I'm showing you over here, you are waiting for it to hit a swing high. Okay, a swing high, and it starts retracing, starts coming down. So you're waiting to buy when it retraces by 50%. So identify your A. A is your level of resistance, or where the price started moving up. B is a swing high. So using the Fibonacci tool, what we do, that's right, we click on B, right? Connect B first, right? Connect the swing high and drag it down to A, which is the resistance level. Again, all this will be shown on the MT4 charts in a while. So if you're still not sure, we'll clarify it later, don't worry, yeah? So when you click on B and you drag it to A, what happens? You will see two levels. You will see the 50% retracement level, which is here. Is the one. Let me circle it, okay? And you will see the 161.8 extension level, which is here. All right, these two levels will appear on the Fibonacci tool. So now we've got that, you can place your orders. So first we place a buy limit order. We place our buy limit order at the 50% retracement level. So there we go, at the 50%, we place our buy limit order. So the moment the price hits the 50% level or lower, it will fill our buy order. The other thing to ensure is that the retracement, which means from B, point B, to the 50% level, right? This retracement amount, okay, should be at least 2 ATR, a 2 ATR retracement. Or if it is not a 2 ATR retracement, we can also take it, but there should be a level of support. In other words, when it retraces here, there should also be another level of support here, okay? And if there's a level of support here, then it doesn't have to be a 2 ATR retracement. It can be at least a 1 ATR retracement. Again, this will be explained on the charts in a while, okay? Next, where do we place our stop loss? We place our stop loss 5 to 10 pips below the resistance level. Okay, so that's our resistance, that's our point A. Place the stop loss below point A. Anywhere from 5 to 10 pips, it's fine. As long as your entry to stop loss distance, which is your entry to stop loss distance, that's your 1R. Your 1R distance, you have at least 2 ATR. Okay. Where do we place our TP, our take profit? We place it at the Fibonacci 161.8 level. There we go. Right. And ideally, we want to ensure that we are risking 1 to make, well, it says 1.5 here, but again, as long as it's more than 1, you're risking 1 to make more than 1 is fine. So there are times, 1.4 R, I'll take it as well. But, I wouldn't say, I'll say not less than 1.3 R, okay? But 1.5 R would be ideal. Now, here are various breakout patterns that you may see, all right? Because sometimes we may not be clear where's our A, where's our B. So now the first example is a very clear one. So obviously there was a level of resistance over there, and you can see it started moving over there. So again, where's A? A is where our level of resistance is. Or we can also say that A is where the price started moving strongly. So in this case, that's A, that's B. Remember, take the Fibonacci tool, click on B, drag to A, and you would see the 50% retracement and the 161.8 target price, or some people call it 1.618. Doesn't really matter where you put the decimal point, right? The point is 1618. Now, here's another example which you may see where there was a resistance there and it kind of like broke out, right? It broke out there and it kind of like went sideways a bit and then it started moving up. So in cases like that, I would actually place my level of resistance at this dotted line, okay? Because in a way, this was the resistance, it broke out and it became the support, right? So resistance has become support. So this dotted line is my level of resistance, okay? So again, A is where it is my level of resistance, and you can also say that A is where it started moving up. So notice that this wave, the wave that's going up, starts at A, all right? Starts at A over there. And again, we are waiting for a 50% retracement with our buy limit order ready to enter. Here's another example you may see where the price has been going sideways and then it gaps up. Now, the moment you see a gap, that gap area acts as a level of resistance as well and support. Okay, so if it gaps up, that is where I will be drawing my level of resistance. And again, we call it A, which is the start of the point where the price starts moving up strongly to our swing high. So again, click on B, drag to A, it'll tell you your 50% retracement level. You place your buy limit order there, waiting for it to retrace and fill your order. And it will also show you the 161.8 target price. So let's take a look at the MT4 charts and I'll show you how you draw the Fibonacci to look for these levels.